Good afternoon and welcome to NYFP. In mid-afternoon trade, the major U.S. stock averages remain in the red. We're seeing the Dow and S&P 500 off by at least half a percentage point. Joining me this afternoon is Warren Meyers of DME Securities. Hi Warren, thank you for joining me.
My pleasure.
Well, the European markets have closed for today's trading session, and ahead of the EU summit this week, I'm sure we'll continue to get more headlines. But how have you factored in the Eurozone region risk?
I mean, it seems like our markets are reacting 100% to what's happening over in Europe. And if you've noticed, when Europe closes weak, we tend to follow that for the rest of the afternoon. We're down about a percentage or so, give or take now. I would expect us to probably drift lower and match close to where their levels were. They closed down on average around 1.5%, 2% today. We'll probably follow the same. So all eyes are on Europe. We're following it. We're all anticipating what's going to come out this weekend. In the interim, it's all rumor. Everything's rumor driven now. If you hear anything out of Europe, you react very quickly, and then you find out maybe later, maybe it wasn't so true or not. So it's a very skittish market, and it's a tough trading market because of that.
Well, Warren, shifting our focus on back to the U.S., we did get mixed economic data in today's session, and all week we've been seeing mixed figures in terms of inflation as well as housing. Were there any surprises?
I wouldn't say any surprises. I mean, the jobs number was a tiny bit better this morning, but it's still in the 400,000 handle, and that's just discouraging every time you see it there. So, you can look at things half full or half empty, and you can say it was a little better than expected, so we'll take that as a positive. You can also say we're not making much progress, so it's a negative. I don't see many surprises there. I think a lot of the focus this week is on earnings as opposed to the economic data, and so you're seeing some movement based off of those.
Okay, Warren, since you mentioned earnings, it will be quiet on the economic calendar on Friday, but we will be getting a handful of earnings, including GE as well as McDonald's. Are there any technical levels you're watching for the equity averages?
Yeah, I'm not really looking at those specific stocks, but I am looking at the S&P, and if we look at the range, it's kind of been trying to find over the last few months. We got down around 1120 as a support level. 1220, 1225 seems to be an upper level with resistance. We had a big strong run up a week and a half ago. We got up to that 1220, 1225 level earlier this week, and the market seemed to stall there. So I think we're in that range. We're on the way back down. I'm not saying we're going to go down to 1120, but it's going to be driven based off of earnings, and it's going to take big positive earnings to push us through that resistance level. I don't know if we can do it yet or not.
Okay, Warren, well, thank you so much for your time today, and thanks for weighing in on all these topics.
My pleasure. Thank you.